Hey, what's up, everybody? This is LT, the Capital Guy with Prescott Capital Solutions. And today we're going to talk about the 5 reasons that people fail at building business credit. But before we get into that, why don't you guys help me out by giving me a thumbs up, click that like button as well as that subscribe button so that you're reminded about any time I come out with any new material, new videos in relation to business credit. I'm going to be putting out a lot of content, and it'd be great if you were notified when that happens. So let's get into it. All right, guys, welcome back. And to jump right into it, we're talking about the 5 reasons that people fail at building business credit. And to start with, one of the things that people don't do as well as they should is to build their fundability profile. I did a video not too long ago where we discussed the 7 steps in order to build your fundability profile. And we talked about improving that fundability, of course, being able to make sure that you have all of the things that are needed in order to be able to build your profile, meaning like get your address, and make sure that address is in line with the United States Postal Service, and it's the same on all your documentation, such as your Secretary of State documentation, registration, your EIN, making sure that you have your NAICS codes, and make sure that they are descriptive of your business. Even in your business name, making sure that your name is not considered or not reflective of a high risk industry. Making sure that you have your website set up. You want to make sure that it's yourdomain.com. Whatever, if your business is Ron's Lawn Care, you want to make sure that your domain is www.ronslawn.care or something similar.com. That makes sure it's professional. Your email address should be, your name or info or consult or whatever at your domain.com. And so you want to make sure all that's set up. Also, you want to make sure that you have all of your records. All of your records should be congruent, meaning that your address, your name, the spelling of your name, everything about your business should be the same on all of your records. And that's very important because, as you go and fill out applications for credit, whether it be credit cards, lines of credit, bank loans, things of that sort, especially with the SBA, you want to make sure that you have all of your ducks in a row. Make sure that you have all of your T's crossed and make sure you have all of your I's dotted, because that's going to mean a lot, when you start really getting into applications where, people are looking at your business. And in some cases, a real life person may not be actually reviewing your application. It may be a computer, and a lot of times a computer can't tell the difference between the abbreviation of something like East in an address versus East spelled out. So you want to make sure everywhere, in your EIN documentation with the IRS, your bank account, you want to make sure with your Secretary of State registration, all of that stuff on your website, make sure everything is the same as far as any of your identification features and properties for your business. All right. And so that's one way that people mess up in building business credit. Now, another thing that people fall off doing when they start. So let's say you get all of your fundability profile set up and you're good to go. Everything is rock solid. Everything's the same, but you start applying for what we call tier 1 vendors. And tier 1 vendors are basically just vendors starter vendors. So if you have no credit, no business credit whatsoever, you're gonna have to get some credit. And so there are some vendors out there that offer things like net 30 terms, meaning that you can apply for credit and get credit to where you buy something and you have 30 days or net 45 days, net 60 days, or 90 days to pay it back. A lot of vendors are net 30 or net 15 days as well. So you want to be able to get some of these vendors so that you can actually start building trade lines. And so the tier 1 vendors are the vendors that will take a risk on you, being a relatively new business, building business credit. They'll extend your credit and then report that activity to the credit bureaus. And so where people make the mistake is they are impatient, and they may apply for, one vendor, one tier one vendor, maybe two, maybe even three, but then they'll jump up to the tier two vendors, and they'll start applying for those, and they'll get denied, and they start getting discouraged. And that's not a good thing, because a part of this journey is the small wins, right? And you want to make sure you get some of those small wins in the beginning, because it helps keep you motivated so that you can move to the next level. Because you have to remember, this is not a get credit quick scheme here. This is a long race, right? You're in this for the long haul. If you're building your business credit properly, you should be able to get to the point where you're getting high limit credit cards and loans and things of that sort within 9, 12 to 18 months. It's definitely possible to do, but you have to trust the process. You have to go through the process and complete the steps in order. Being impatient is not going to help you get to your goal faster. So, because you think about it, you have to, prove that you are responsible with the tier one credit vendors before you can move up to the others and get extended additional credit, maybe with more, expensive, lines, higher limits, or whether it be with more expensive types of vendors, with equipment, things of that sort, electronics or whatnot. So you want to make sure that you start at the bottom. Don't be so impatient to try to go out of order. Start at the bottom, build that process, build the credit, and then move through the process until you achieve the ultimate goal of getting those high limits. Okay, so the third mistake that people make when building business credit is, okay, so they got their fundability steps down. They have started applying for tier one vendors, and you got your tier one creditors, and you have your net 30 terms, and you've already ordered some stuff, but you order one time and you stop, and you're wondering, hey, why isn't my score going up? What's going on? These vendors, when they extend you credit, it's not just like a one-time thing, right? You have to continue to purchase from them so that they know that, okay, well, you're really managing, your credit with us. It's not just like a one-time thing. You're really showing us that you can handle this credit, because, if you take care of those, even though they're tier one, if you take care of those tier one vendors, they may do other things like, offer you some sort of unsecured, type of credit as well, other than net 30 terms, if they come out with other programs and things of that sort. Also, some of these vendors may not report, for a quarter or, or even more. So if they see that you may have only purchased one time for, something like $50 or something, they may not decide to report you. Every company has their own rules and how they report to the credit bureaus. But it helps if you make sure that you show them that you're a good customer and you're making purchases and you're serious about establishing credit and establishing a trade line with them. If you do that, they will take care of you. So the rule of thumb is to try to make purchases anywhere from $75 to $100 from many of these vendors, and then try to make purchases every other month if you can, to again really build that credit with them and make sure you're establishing these trade lines. And when they report them, you'll be able to see that activity that you have generated with those companies. So again, when you get your tier one vendors, go ahead and make purchases and continue to make purchases, continue to show them that you're responsible until it reports. That's when you can move up to the next level. And then you're gonna rinse and repeat. All right, so now I did kind of touch on the fourth reason people fail at building business credit when I was talking about number 3, which was to make sure that you make regular purchases with your vendors. Well, the fourth thing is making sure you purchase enough, right? So just like I mentioned in the last point, is you want to make sure that you're making purchases, I would say 50, 75, maybe 75 or $100 per order is probably the safe zone. But there's some people that they'll make an order for $20, $30, and they wonder why they're not reporting, and that's because they're not purchasing enough. You have to purchase enough in one order for them to report, and many of them, they have their different criteria. Some it may be $50, some it may be 75, some it may be 100. But I tell people, if you can afford it, go ahead and do $100 worth of purchase from your vendors. And again, as in step number 3, make sure you purchase often, from them, so that again they see that you're a serious customer and you're responsible with your business credit. Okay, the final reason that people fail, and it's probably one of the most obvious reasons that people fail at building business credit, is that they don't pay their bills on time. People, you have to pay your bills on time. It does no good to get credit and not pay your bills when they're supposed to be paid by the due date. Now, in most cases, if you're paying your bills by the due date, within the day of, or I would say to be safe, try not to pay the day of, or the day, actually on the due date. Even though technically, as long as you pay on the due date, you're fine. That's just a little too risky for me. What if something happens, you trip and fall and, you forget, next thing you know, it's the next day, it's too late. Then the actual recommendation, the best practice is to pay your bill as soon as the invoice comes out. And many companies are different, but typically invoices may come out anywhere from 5 to 15 days before the bill is due. Typically, I think it's about 10 days. So if your invoice comes out, go ahead and pay it, because that will basically guarantee you the highest possible scores. Like if you're paying your bills on time, or let's say a couple of days before the due date, let's say with Dun & Bradstreet, you're going to get an 80 paydex score, right? The 80 paydex score means you pay as agreed. Basically, you're paying your bill by your due date, and it's close to your due date. But if you want to get a higher paydex score, they want to see that you're paying your bill, a week or two before your due date, meaning you're paying early. You're an early payer of your bills. That's how you get the higher scores in your business credit reports. But paying bills late, and I've seen so many things where people say that they forgot to pay their bill, or something happened. That's the worst thing you can do. And if it happened to you, I don't want to discourage you, because yes, you can get past it, but you need to fix that now and come up with a way to make sure that you do not miss any payments in the future. And eventually, those late payments that may show up on your business credit report, they will start to lose impact on your credit score. But you have to make sure that you keep your bills in some sort of spreadsheet or some sort of application, or whatever you need to do to make sure that you're not missing any payments, because that's the worst thing that you can do in your efforts to build business credit, is to not honor the credit terms that your creditors gave you in pursuing the credit that you have with them. So that was pretty much it, guys. Just wanted to kind of drop those nuggets to you. Again, we talked about the 5 reasons. There are 5 reasons that people fail at building business credit. So obviously we talked about not building that profile that you need in order to make sure that you maximize your chances of getting approved. Being impatient and not following and trusting the process. It's very important to trust that process, because the process will help you achieve the end result that you want. Also, being able to make regular purchases from vendors. When these vendors extend credit to you, you want to be able to make purchases with them so that they can see that you are a serious customer of theirs, and they're going to report your activity. But even within that, you want to make sure you purchase enough in any one order. Make sure you're actually purchasing enough of their product in order for it to register and for them to feel that it's worthy to report to the credit reporting agencies. And then last but not least, we talked about paying your bills on time. Now, obviously that's a no-brainer, because if you're getting credit and you're trying to build credit, the number one thing that you should do is to pay your bills on time. Even if we look at consumer credit, right? When we look at the 5 things that make up your credit, the thing that weighs the most, which is 35% of your FICO score, is your payment history. How well have you paid your bills on time? That makes up 35% of your FICO score. And so if you pay your bills on time, you will drastically impact your credit score to where vendors will see you as very low risk. And if you continue to do that on that journey we were talking about anywhere from up to 18 months, you could get some things. Obviously, you're going to be getting some credit along the way, but we're talking about reaching that ultimate goal of the high limit American Express, high limit Chase cards, the business cards, also being able to purchase equipment or even vehicles for your business. You need to be able to show some history, right? And it's not just a few months to reach that higher. You're going to have to show, in some cases, it could be obviously 1.5 to 2 years of positive business activity in order for you to be able to take advantage of those high limit credit opportunities. So again, I just wanted to drop those nuggets to you. If you have questions or you need assistance in being able to get business credit, please, we have a free consultation where we kind of help you pull your business credit and do an evaluation and help you go through those steps in order to build your business credit. We also have a platform called the Business Credit Builder, which helps you go through each one of these steps and track your progress. And there are over 125 factors that are critical to being able to build that fundability that we talked about in the first reason people fail. And we have all of those factors dialed in. And so if you're interested in a free consultation, please give us a call or shoot us an email at consult@prescottcapitalsolutions.com, and we'd be happy to help and see how we can help you achieve your goals in building business credit. We also do funding, direct funding. We have grant programs, we have loan programs for startups and things of that sort. So if you need help with funding your business, again, please don't hesitate to reach out, and we can help you and kind of get you to that point to where you are a fundable business and get you the funding that you need for your business. So that's it, guys. This is LT the Capital Guy, Prescott Capital. Again, if you like this and you want to see more content like this, please go ahead and hit that subscribe button as well as the like button so that we can give you more and make this Google algorithm happy. All right, guys, take care, and we will talk to you soon.